Olamide, thank you so much for joining us today. Before we get to the consumer goods companies, I wanted to get your thoughts on the trend that we're seeing with the market. We saw a really good week last week where it was up every single day, but then it seems to be tilting lower. What you're reading of the market right now in terms of what is driving investor sentiment?
Well, thank you, Wale. So, as you'll see, I think what has happened so far is you've seen a bit of so this week you're seeing a bit of profit taking, but last week or in the past, I think in like 7 weeks, we've actually recorded straight gains, in the market. And what has happened is you've seen investors try to take position, haven't seen the Q2 results, with financial services being, one of the major beneficiary of the gains that you've seen. Also, you will find out that across the world, you would see even with the global indices, you'll find that investors are gradually moving away from the tech stocks that happen to be the safe haven stock where there was a lot of uncertainty. You're seeing them, try to pick up some other names that might have been undervalued, just to position for some sort of rally that might come in, later, assuming things pan out, and economy starting to gradually recover, being that the the discussions around the second phase of the virus is gradually easing out. What you're saying now is just a lot of stimulus to actually drive the economy. US, for instance, has said that it's looking at leaving its interest rate really low in order to spur inflation as well as spur consumption. That way, they're able to drive their GDP, drive economic growth. So basically, what you're saying is people are more focused on the stimulus that a lot of most of these countries are actually putting in place, and then they're also looking at stocks that have been really badly sold off, undervalued in the
Right.
past, take positions there.
Okay. Olamide, if you can just speak to this point, many would argue that perhaps it's not the right move to continue to ease the lockdowns, given how Nigeria has been dealing with the outbreak of the virus in Nigeria. But I do get the sense that it's inevitable that we'll see more and more easing moving forward. It may drag, but I think just the sheer weight of the economic impact continues to put pressure on the government to ease those lockdowns. So against that background, I wanted to hear your perspective on how consumer good companies are likely to thrive, say, over the next 12 months.
Well, so for the consumer names over the next 12 months, I think what you would find is aside the fact that there's been lockdown state for a while and people were unable to or sales they're unable to sell like they used to. Places like the beauty sector, activities were shut down for most of these bars and lounge that would have sports sales. I think what will happen over the next 12 months is first their cost will be really pressured, so you could see a bit of recovery for the cost leg, for the revenue leg, because activities are gradually returning, parties are gradually coming back. So you could see a pickup there, but cost will be a big problem for them in terms of the FX devaluation that has happened will definitely affect them. Some of them that import their raw materials will also be affected because the cost of most of these imports have actually increased. So for me, a general outlook for the consumer segment, over the next 12 months, for some names, you will see a bit of interest for breweries. Some of the names in the brewery sector, you could see a bit of interest, for those stocks there because a lot of them were really sold off. But for the food names, you might not really see so much buy interest in that space. Nestle, for instance, you've seen it literally stable, in the last few weeks, despite the gains that you've seen in the market. And that's because a lot of investors are actually quite concerned, concerned about the impact of the cost, on most of these names. Also knowing that a lot of them are unable to pass on the cost to consumers because consumer wallets remain depressed. You have a lot of other cost items are actually going up. Aside the currency that I mentioned, PMS has gone up. I mean, name it. There's so many electricity charges have gone up, and they need to pass on some of these cost items. But what you're saying is a lot of them were unable to, and they might not be able to pass the full cost, onto the consumer. So you might really not see so much interest in that space, except things change at that end. But yeah, they'll
Right.
be really affected by cost.